Good morning and welcome to the ADS Securities Markets Update. The US dollar short-term rally continues yesterday on the back of mixed economic releases. However, the current rally remains within our retracement estimate, which is likely also to remain well below the 97.30s and 97.40s. This is for the US dollar index before the downside trend continues, or maybe ahead of today's data, in addition to the FOMC meeting minutes later tonight. But so far, the 97.30 and the 97.40s basically represents its 61 and 50% retracement from the recent decline. So basically, we have to look at these numbers in the coming days. But as far as the index continues to trade below these levels, we maintain our short position, or we maintain our bearish outlook. Beginning with yesterday's figures, yesterday we had more disturbing news from the U.S., which both of the housing figures missed the estimates. The building permits crashed by the most since 2008, declining by minus 16.3% in July after rising by 7% in June, while the 10-minute anticipated also to decline only by 8%. This is also the first monthly decline after 3 months of consecutive gains. In addition to that, we had the good news came in from the housing starts, but it increased way less than the market estimated, rising by 0.2% only in July, while the estimates were to rise by 0.5%. However, the units increased to the highest level since 2008, and this is one of the reasons why the US dollar got some support yesterday, despite the fact that the numbers are less than expected. In the UK, and in line with our estimates, the inflation figures came in with mixed outcomes. However, the key was the core CPI, or the core inflation data, which increased to the highest level since almost 5 months, and this was enough to support the British pound across the board yesterday. We will go into more details in a bit, but first of all, let's review the Asian and the upcoming session figures. Beginning with the Asian session in New Zealand, the PPI figures declined but less than expected, and basically first beginning with the inputs, or the PPI input, it declined by almost 0.3%, and the output also decreased by only 0.2%, but this is also the fifth quarterly declines in a row for both of them. The estimates were to decline by 0.5% and 0.2% respectively in the previous quarter, or during the second quarter of this year. In Japan, the trade balance deficit also unexpectedly widened again to minus 0.37 trillion yen compared to minus 0.28 trillion yen, while it had been anticipated to narrow back toward minus 0.16 trillion yen, and this is the highest trade deficit since February of this year. During the European session ahead, we wait for only one economic release from the Eurozone. The current account surplus is expected or set to rise toward 19.2 billion euros, up from 18 billion euros. As for the US session today, eyes will be on the inflation figures in addition to the FOMC meeting minutes later tonight. But the inflation data may slow down further on the back of declining gold prices. But traders again needs to keep an eye on the core inflation, or core CPI data, especially the year over year, which will be the key again, just like what happened in the UK yesterday. The FOMC meeting minutes will be released today at 10 p.m. Abu Dhabi time, which is equivalent to 6 p.m. GMT time. China's latest decision, or latest action to devaluation of the Chinese yuan will not be in this meeting statement, but we believe that the Federal Reserve may change the tone a little bit again, especially after the recent decline in oil prices for the past few months. Moreover, we will be looking specifically if the Federal Reserve will keep the transitory sentence. If the Federal Reserve changes this sentence, this will be considered as a dovish statement, and therefore the US dollar may or might be under pressure again. Looking into some technicals again, or finally into some technicals, beginning with the British pound. And after yesterday's figures, basically it spiked sharply after the core inflation increased by the most in 5 months, as we noted before, increasing the chances for a rate hike by the Bank of England in early 2016. But at the same time, the British pound closed the day, or yesterday, above 1.5650's resistance area. This is the 4-hour chart, and this could be considered as a breakout of its tight range, which basically lasted since mid of July, and retreated back again to the same level which basically switched to support level before advancing again in Asia. Today we'll be looking at another close above 1.56, which basically would clear the way for further gains ahead. As for the euro, if you're looking, yesterday we've seen some sort of, or before going into the euro, this is the daily chart for the British pound, which basically it failed to break above 1.5701, which represents a 61.8% retracement from the recent also decline that we've seen in June until mid-July. And right now we need to break above that level to clear the way for further gains ahead. Finally, looking into Finally looking into the euro, which basically continued to decline yesterday, reaching as low as 1020s, which basically also a retracement of 50% from the recent rally as shown here on the chart. But in the meantime, we maintain our positive outlook as long as the pair continues to trade above 1.10 and 10988, which also represents a 61.8 retracement from the recent rally since also the beginning of June, and since the beginning of July of August until the highs of this month. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. We'll see you once again tomorrow.